It's James Nixon there with that report on OneSteel. One of the key ingredients in steel production is a commodity we actually don't often hear about, molybdenum. Prices of the resource have been on the increase of late, and futures and in the commodity are set to be listed actually on the LME in 2010. Strzelecki Minerals is an Australian listed company with one of the world's largest deposits of the resource. And we're joined now by the company's director, Andrew Zemek. Andrew, great to have you in studio.
Good morning.
And I'm fascinated to talk to you today about molybdenum, because I've never done an interview about molybdenum before, but it is a key ingredient for steel production. Just tell us a little bit about it before we get going, and want to talk about your projects in Poland and sort of the consumption and production of molybdenum. But you've got something here to show us.
Just to make it easier for you and for the viewers, I brought a piece of core, which is coming from the depth of the earth, from 600 meters below the Earth's surface. And I brought this rock all the way from Poland, some 14,000 kilometers from here. But I think it was well worth it, because molybdenum is frequently called the metal of the future. About 80% of its consumption is associated with steel production, mostly special steels, stainless steels, and so on. And therefore its consumption follows the steel production patterns. However, the steel production is not distributed equally around the world. I mean, the biggest producer of steel would be China, as you would expect, but they produce normal, ordinary steel most of the time. Most of the specialized steels, they are produced in Europe. And Europe has a disadvantage of not having any molybdenum mines at all. The nearest to Europe is Iran and Armenia, and then obviously North America, South America, and China. So with this deposit being right in the middle of Europe and the European Union, because it is in the heart of Poland, that has certainly a geographical advantage, being very close to the consumption region for molybdenum. 29% of world molybdenum consumption is in Europe, and there's no production at all.
And you're just one project, though. How big is your project, if that's
our
the biggest
project
market?
will be certainly the biggest in Europe. We consider it to be...
The only one in Europe?
Yes.
Yeah, exactly.
Yes.
Okay.
We consider it to be number 7 in the world in terms of size, and within the first 12% of the richest deposits in the world. I mean, in case of molybdenum, we are talking about parts per million, so-called ppms. And our ore is about 0.1% molybdenum, which is high for this molybdenum. Most of the world production comes from the resources which are about half of this size.
Because just when you were showing us that before, what's evident is you talk about that strip that's, I don't know if we can get it back on the screen again, we might not be able to, but you showed the sort of the strip that goes down there. I mean, that's a very small amount in big chunk there. I mean,
it is, but
it's
obviously
a high cost to get this out of the ground.
We will be a sort of medium cost producer, because this will have to be an underground mine. We are about 200 meters below the ground, and then stretching all the way to about 900 meters below the ground. So that is a disadvantage of the project, that it's underground mine. Many are open pit. However, the high grade compensates for that. And also another thing which is worth remembering is that we are in the middle of highly industrialized region in Poland. The railway line is just 1 kilometer from the project. The power lines are actually crossing the property. There is a small town nearby which with 16% unemployment, which is twice the regional average, which means that there is a lot of local support for the project. Many Australian producers, for example, have their projects in the middle of nowhere, so they have to build all the
problem, the infrastructure,
all the roads and all the power and so on. We have none of these problems because we're in the middle of the industrialized area.
Something that is worth chatting about, I suppose, is that you mentioned it's kind of highly leveraged to the steel industry, or the exposure is sort of really there. The steel industry, as we know, and we just heard from OneSteel's reports yesterday on the Australian market of the very challenging year they've had, and to my mind springs the issue of the auto industry in the US as well, and how much that's suffered. Did you see much of a drop-off in the molybdenum prices?
On the contrary, I mean, like with all commodities, we've seen the slide after the world sort of stock market and commodity prices crash. It went down to $7 per pound, because it's priced in dollars per pound, in about February, March, but it's been creeping up very significantly and recently crossed $18 per pound, which is indeed a very significant hike of the price. And many experts predicted it going over $30 per pound, even some are even talking about $50 per pound in say 3-4 years' time. Our mine will be will not be there, tomorrow. It will take probably 3-4 years, maybe 5 years before we can talk about building the mine there. Okay. But in the meantime, we will be progressing our exploration, drilling more holes in it, and obviously progressing towards mining.
But will you be reliant on the recovery of, say, the world auto market in order to get those kinds of prices?
To some extent, but as I said, I mean, molybdenum is linked to steel, but because it's to do with specialized steel, this market is sort of leading the life of its own, and it's much more robust than the steel in general.
There was something worth mentioning as well, in that China's historically been a very big supplier of the metal, but there are changes happening there, a shift.
That is right. I mean, they are consuming most of their molybdenum at home, and therefore there is a growing supply-demand gap. Also, you need to know that half of world molybdenum is coming from primary resources and the other half from secondary resources. By that we mean, for example, in Chile, a lot of it is mined with copper. Copper is #1 metal and molybdenum is #2 metal. Those sources are gradually drying out. The supply from secondary sources is stabilizing and stagnating. So the world needs new moly mines in the next 4, 5, 6 years. So the demand will be certainly growing, and therefore the price will be growing too. Another thing to mention is that, as you mentioned in your introduction, from next year, London Metal Exchange is going to be running their molybdenum contract, a futures contract, which to people like us mean that we will be able to hedge our production, i.e. catch the high prices before we even have the mine, which is extraordinary event for people like us. Another thing is that usually metals which are traded on a London Metal Exchange, they have a lot of liquidity because futures market attracts speculators. They bring liquidity to the market. This in turn brings volatility of the prices. And usually for producers it's very good because they can hedge, they can sell forward their production before even they have the mine.
And fascinating to listen to you. We're out of time for now, but really great to have you on, Andrew, and thank you very much. Appreciate it.
Thank you very much.
That's Andrew Zemek there from Strzelecki.